Hi everyone, welcome back to the Mortgage Heroes FAQs playlist, your go-to source for everything mortgage related, especially VA loans. Today, we're tackling a controversial question: are VA loans bad for sellers? If you've ever sold a home, you may have heard some concerns about accepting a VA loan. Some real estate agents even discourage sellers from considering VA offers, but is that really fair? And what are the real downsides for sellers? Stick around and we're going to break it all down. First, let's go over the reasons why some sellers hesitate when they see a VA loan on the table. Number one, VA appraisals are stricter. The VA requires a special appraisal, often more rigorous than a conventional loan. This is called the VA Minimum Property Requirements, or MPRs. The goal is to ensure the home is safe, sound, and sanitary for the veteran buyer. But for sellers, this can be a hassle. If the home doesn't meet VA standards like peeling paint, roof issues, or missing handrails, for example, the seller may have to fix those before closing. Number two, VA appraisals can come in low. Another issue is that VA appraisers can be more conservative in their valuations. If the appraisal comes in lower than the agreed price, the seller has to either lower the price, negotiate with the buyer, or risk losing the deal altogether. Unlike conventional loans, VA buyers can't just waive the appraisal and pay the difference out of pocket. Although there are some exceptions handled on a case-by-case basis. Number three, closing costs. Who pays? Well, here's the big one. VA rules limit what buyers can pay in closing costs. That means sellers are often expected to cover some fees that wouldn't be their responsibility in a conventional loan. This can include termite inspections, certain loan fees, and even some escrow costs. Number four, perceived loan process delays. Many real estate agents believe VA loans take longer to close due to government involvement. While VA loans used to be notoriously slow, this isn't as big a problem today. But perception matters, and some sellers prefer conventional loans that feel faster and easier. Number five, no earnest money risk for VA buyers. VA loans allow veterans to back out of a deal if the home doesn't appraise or meet VA standards without losing their earnest money. While this protects buyers, it makes sellers nervous because they feel like VA offers come with more uncertainty. Okay, so we've covered the main reasons sellers might hesitate to accept VA loans, but is the fear justified? Not always. VA loans aren't necessarily slower. Many VA loans close within 30 days and some as fast as 10. Which is similar to conventional loans. The key is having an experienced lender and real estate agent, and especially an efficient appraiser. Not all homes will have issues. If a house is in good condition, VA appraisals usually aren't a deal breaker. Sellers can negotiate. While VA loans limit what buyers pay in fees, sellers can still negotiate who covers what. So while VA loans do have stricter requirements, they're not the deal killers that sellers assume they are. So if you're selling your home and receive a VA offer, should you accept it? Well, that depends on a few factors. If your home is in great shape, the VA appraisal won't be an issue. If you're in a seller's market, you might be able to negotiate for conventional offers instead, but that doesn't always mean that they're better. If the buyer is well qualified and pre-approved, a VA loan might just be as smooth as any other. The bottom line, VA loans aren't inherently bad for sellers, but they do come with some unique challenges. If you found this video helpful, remember to hit that like button and subscribe for more mortgage insights. And if you have questions about your VA loan, whether you're a buyer or a seller, drop them in the comments. Thanks for watching, and I'll see you in the next video.